cross-border economy. So that would definitely take time to recover. And obviously, I'll also covering in terms of offline businesses, the huge impact on offline businesses because of customer behavior now. The change in expectations is really huge. That I am not sure whether it will recover because I foresee online businesses taking more traction as we move forward.
So, Mr. Ghosh, Jayat Ghosh, how is your feedback? In fact, you also must be getting a lot of industries to talk to you and seek your, help, handholding, as Vadvani Foundation is basically engaged in counseling and educating, guiding, training the basically MSMEs. So, what is your feedback with regard to the current state?
Yeah, there's a lot of interaction that's happening with the SMEs, as well as a lot of them are reaching out to us. We are also reaching out to a lot of them. So, see, there are two, three things. I think a lot of them are reaching out as well as want help on the financing aspects of. Some of them have raised capital. Some of them want to raise additional capital. A lot of schemes have been announced by the government, but when they come to take the actual loan or additional loan from the banks, the bank branch managers have a different perspective, even though the schemes have been announced. So a lot of problems on actually getting the actual benefit of the schemes. That's one thing a lot of them are echoing. On the supply chain aspect, of course, as Alvis mentioned, there has been, for example, some of our SMEs have, because the prices have come down for some of them, not for all of them. For some, prices have come down, and some of them were anyways cash rich even before the pandemic hit. So it has been a bonus for them. They have been able to stock up things without having to increase their inventories. So for some specific industries, it has been a good thing as far as the raw material incoming is concerned. Of course, finished products going out, that has been a concern. That has been a concern for everyone, I guess, with disruption in the supply logistics chain of command. So I think, so it's a mixed bag. It's very difficult to put it under one bracket as to whether people are what you call having trouble or getting excited with this. So yeah, it's been a mixed bag, but yeah, a lot of people and a lot of SMEs are unsure of what to do, because I think SMEs intrinsically, even big companies. So I have been in the consulting world for quite some time. Even bigger enterprises I have worked with, many of them don't have their own budgets also, right? So when big enterprises don't have a budget, and budget is mostly a hunch or a gut feeling from some of the salespeople and all, right? So a lot of these SMEs don't create their own budgets. So now that the pandemic has hit, the budgets that they had in their mind, it's not looking too good at all. So budgeting is another problem that we are encountering. So we are trying to put a process in place for many of the SMEs, where even if they don't have their own budgets, they create a budget going forward for the next 6 months. So budgeting, supply chain, fund received from government enterprises as well as banks. So 3-4 problems that we are seeing as a standard problem that they're encountering.
Yeah, Mr. Shah, you have been a commercial banker basically. I was reading your profile.
Yes.
With a lot of experience, almost 20 years plus. So there is a lot of issues coming out of the dealings with banks. The intention of the government is not getting transferred or passed on to the consumers or customers, and the most of the time the people say the culprits are the banks. So what is your take on this?
So I'm going to touch upon this in my presentation, but I would say there are fault lines on both sides in terms of accounting, accountability, in terms of submission of documents on time on part of SMEs, probably because they are less organized, I would say, not because of any intention. And on the other side, the bank's risk profile. I mean, I've been working with private sector and foreign banks. So these banks have a lower risk appetite, if you ask me. So, the moment something happens, the belts are tightened.
Yeah, that's right. No, banks also have the obligation. Ultimately, they are dealing with public money.
Yes.
So they can't be just, so charitable that they keep accommodating everybody. They have to be choosy, in selecting their customers and to whom they want to lend and to whom they don't want to. So
Doctor, can I come in here, please?
Yeah, you want to start?
Yes, sir. Actually, I have been getting a feedback that many people are not being able to join using the link that we circulated. So we have decided that let's start the session and we will circulate the recording of the session later to all the registrants who registered with us for this program.
Whatever you decide. Is okay.
So let's begin with the session here, today, and just let me start with the. I welcome all the participants who have joined and who will be watching this session on the recorded format. And I welcome all the speakers here. We have a very decorated panel of experts today with us. We have Dr. H.P. Kumar, who is a former CMD NSIC, and he's also associated with Power to SME as Director of External Affairs. We have with us Mr. Alvis Lazarus, who is the CEO of Hesol Consulting. We have Mr. Amit Shah, who is a financial consultant by profession. And before we start the session, I request all the participants, if you have any query to be asked to the experts, kindly submit your questions on the chat. These questions will be taken to the speakers in the Q&A session. And before I hand over the session to Dr. Kumar, let's introduce the organizers of this webinar in a very brief manner. The session is organized jointly by Power to SME and Wadhwani Foundation. Power to SME, it was established in year 2012 by our founder and CEO, Mr. R. Narayan. It is the demand aggregation platform which procure the raw materials from big manufacturers and supply them in smaller quantities to the SME manufacturer, thus transferring the price benefit to the small manufacturers. This is the entire Power to SME ecosystem. We have 4 major verticals. Power to SME, which is into raw material procurement business solutions. Our branch Finance Me, it facilitates loans by connecting SMEs to the partner financial institutions for their working capital requirements. Our B2B e-marketplace SME Shops is the India's biggest e-marketplace for MRO and industrial goods. Our NBFC Biz Funds is a very young contemporary NBFC providing very innovative credit solutions, specifically in raw material procurement financing. And these are the key product categories that Power to SME deals in: steel, polymer, paints, yarn, and there are several others. The major industrial segments that we cater to includes auto component, electronics, paints, agricultural tools, engineering, textiles, and there are many others. You can refer to them on our website. Power to SME, in response to the COVID market demand under the COVID crisis, Power to SME's brand SME Shops, it came up with the entire range of COVID-19 essential products. So both the SMEs and big corporate can buy, sell, procure these essential products through SME Shops. We are the invested company. Some of the most reputed venture funds in the country have invested in us. Inventors, Kalari, Excel. Nandan Nilekani is one of our strategic investors. We are also World Bank funded company through its financial arm, International Finance Corporation. These are the few awards and accolades that we have won since our inception. Worth mentioning is the Forbes India Leadership Award that we won under Outstanding Startup category. And this is our social media presence. This is our social media presence. So any of you can get in touch with us through any of these platforms. And we have with us Mr. Jayad from Wadhwani Foundation. He will be elaborating in very brief about the latest initiative by Wadhwani Foundation by the name Sahaita program, which is specifically drafted for SMEs.
Yeah, hi everyone. So this is Jayat Ghosh here. I'm a senior manager with the transformation team of Vadhvani Foundation. So I'll briefly touch upon what we do. So we at Vadhvani, it's a 2-decade-year organization working globally, helping SMEs. So the 4 pillars, as mentioned in this slide, we have an ecosystem of coaches, consultants, investors, and corporates who come together to help the SMEs in whatever problems that they might be having, right from their finance to marketing, their supply chain to whatever problems they have. We have in-house consultant as well as we have a consultant ecosystem which helps the SMEs. Yeah, Zumair, if you can go to the next slide. Yeah, so these are the areas we support, be it problems with your growth, that is your customers, innovation that you require in your products, or you want a diversification strategy, or you want to need some help on supply chain, or you want to move into new geographies, or you want to open up some new channels. This is not an exhaustive list. Apart from this, if there is any other problem that you are having, we have the expertise to help you out. Yeah, so specifically for COVID, a lot of crisis has happened across the globe and across India also. And SMEs, as we know, are one of the most, what you call, group of people who are devastated, not devastated, are impacted radically due to the COVID situation. So what we are trying to do right now is that we're trying to evolve a solution in which we can help SMEs manage the crisis and then put forward a strategic roadmap as to how to recover from the crisis, and then perhaps at a future stage, maybe a quarter or so from now on, put them on a growth strategy so that they can reach pre-COVID levels as well as exceed them going forward. So on the basis of that, what we have created is something we call as the Sahayata program. It's basically for SMEs based out of India and Latin America. These are the 2 geographies where we are doing this program. It's a 200 crore initiatives, and we are here to help around 10,000 SMEs. That's the target that we have taken. It's a high touch engagement model in which Vadhvani will be program managing the whole thing, and we have a lot of consultants with us. For example, even the likes of Deloitte, KPMGs, as well as a lot of boutique consulting firms are working with us. It's a combination of pro bono and paid engagement. It will be starting with the pro bono engagements in which we'll be helping out SMEs for free over a period of 3-4 months. And then there might be some paid engagements that might happen in the future. So it's a high touch engagement model. The consultants will understand the problems that the SMEs are facing and then go about doing it. So we have exclusive partnerships with a lot of people, Power to SMEs being one of them. And as such, I am presenting on this forum right now. And we are trying to save or create jobs. That's the main motto that we have. So yeah, thank you. Look forward to you people joining Sahayata.
Thank you everyone for patiently listening to the introduction of the organizers. And now I request Dr. H.P. Kumar to kindly take the discussion forward. Over to you, Dr. Kumar.
Yeah, thank you, Zumair. Thank you. In fact, the issue that we are going to discuss is very interesting. Manage your business under COVID conditions. In fact, I have been thinking over the last half an hour as to what are the solutions, how do we manage our business under the COVID condition. I have not been able to find the answers. In fact, the feedback that I get from the industry all over the country is that people are really hugely suffered. And it is taking a lot of time, particularly in 2 issues. And both these issues are what we are going to discuss. One is, of course, the broken supply chain, and the other is the finance. So we have 2 experts, in fact, with us, Mr. Alvis Lazarus, who is Chief Executive Officer at Head Consulting. He's going to talk about mainly about the token supply chain and what are the issues connected. How do we get over that problem? And then Mr. Amit Shah, who is a seasoned banker with a lot of experience in banking, practical banking, and he's going to talk about the funding issues and the problems related to financing, how the industry, particularly the micro, small and medium enterprises, are tackling with this issue, and what are the gaps between the availability and access to finance. Let me just set a little context of this. We all know that because of this COVID problem, the entire country, particularly the businesses in the MSME sector, got completely shut down for a long time, and the entire supply chain got broken. Now, what is in the supply chain? Supply chain doesn't mean that it's only a transportation network. Supply chain in fact comprises of every input that is going to the business enterprise or the industry, which is helping in bringing out the output. That is the supply chain. And supply chain, it starts from the infrastructure. Now, infrastructure, raw material, manpower, consumables, all those things, and transportation and network, of course, forms part of the supply chain. Now, starting with the infrastructure, I get a lot of feedback that the existing infrastructure, pre-COVID infrastructure, is not even adequate and suitable in many of the cases to, in fact, continue the production. Because the process of production is such where they can't maintain the social distancing. And if they want to maintain social distancing, they have to change the layout of the machinery and the entire layout of the entire factory. So which is not possible because the land and the construction and the area is limited. The covered area is limited. The plant is already laid. The process is already established. So for them, it is how do they manage under this COVID situation? It's not easy that we have opened and now you start producing. I mean, production means you need to reorganize everything that goes into the production. Now, starting with infrastructure, and then there are other changes which need to be done as far as the infrastructure requirement is concerned because of the COVID requirement, the guidelines of the Ministry of Home Affairs, and the guidelines of the state government, the guidelines of the local administration. So with all these plethora of guidelines, if you fail in complying with even a single guideline, you are subjected to, action. And that is how the people are finding it so cumbersome to manage the operations and to put the entire infrastructure requirement. Of course, people have started doing it, and I've seen in many of the organizations, some of the things have already been done wherever it is possible. But let me tell you, the complete normalization of the operations has not yet started. The second issue of labor, that is another very important input which goes into the production process and starting of the entire. I'm not talking of only the manufacturing, but even service sector enterprises. The workers, the employees, the laborers, particularly the skilled ones who have been performing specific operations, and they have gone back. Some of them have gone back, some of them have gone back but returned, but they are very half-hearted. There is no transportation available to them. The employees are not able to travel, and the transport problem. Of course, some of them have started working from home wherever it is possible. And but then there is complete disruption, which I don't know how much time it is going to take to normalize. So that is another issue. Now, because of the pressure on revenues of the companies, SMEs, because 6 months virtually sales have dampened, realization of bills have not been received, the payments which were, the supplies which were made earlier, the payments are stuck. So there is a pressure on the revenue income, cash flow, as a result of which the, employees also have to suffer. So their salaries cut and their, reduction, in some cases the layoffs also, not in large number, but then wherever there was complete, difficulty, some layoffs also would have happened. So this is another disruption, which is, taking a toll on the efficiency, productivity, and output of the companies and business enterprises. Now, other things, of course, the problem which we faced in the beginning with regard to transportation and other physical, logistics issues, by and large, they have been sorted out. I think now the movement of, like material and movement of raw material and availability of, transportation and other logistics is not a problem by and large. That is what the feedback is. Now, besides this, when you have organized all these infrastructure, raw material is another issue. Availability of raw material. Because of this problem of China imports and the Atmanirbhar, mandate, the imports of raw material also is getting impacted. And the availability of raw material within the country is becoming little costlier. And that, of course, is making another adverse impact on the entire profitability of the companies. So that is another area where we need to look at, and the redressal has to be found out. I don't know how our counselors and educators and consultants are going to motivate the industry when the hardcore fact is that the raw material prices are going up, because our dependence on the imports has to come down, and of course rightly so. But then there is a question of recalibrating the whole pricing. So that is another area which I would like to mention. Now, having organized and having discussed all these inputs, also organize the infrastructure, okay, raw material, bringing back the labor force and workers, somehow motivating them and to start the whole thing. What about the orders? The entire demand has got suppressed. The availability of order also is another concern. Market. So that is another area where a lot of concern has been expressed. The market revival is taking time, and it will take maybe another 6 months, 1 year, whatever. We don't know, in fact, but it's a very gradual, slow pace, because the mentality of the people has got affected. People are conserving their cash, savings. They're not interested to just go whole hog to go into the normal course of shopping and consumerism. So that is another area. Even if you start a normal business enterprise, the market is suppressed, so you're not able to sell the whole thing. So having said all these issues discussed, so that is one part of the discussion that we are going to do. We have Mr. Alvis Lazarus, and then the second issue is, of course, the funding. Now, we all know that the government has come out with good schemes. The emergency credit line of 3 lakh crore, we have already discussed quite a lot in past. That is a wonderful initiative of the government. Ministry of Finance has immediately announced that. And with the change in definition, a lot of new enterprises, have also been covered. So by and large, nobody can say that I am not eligible. Of course, some of them, those who are not dealing with banks, they are left off. So they are complaining that since we were not having the credit limit availment on 29th of February, which is the cutoff date, so we are not been eligible. Some of them are saying that we had the sanction limits, but our availment was less as on that day. And if we had sanction limit of 5 crore, our availment was only 1 crore. We were efficient because we were maintaining our efficiency and not availing the entire credit limit. But then the eligibility says that 20% of outstanding as on 29th February. So you are eligible for ad hoc additional credit facility of 20% of what you were already outstanding, not the sanction limit. So people are complaining about that. We are writing to the government. In fact, I have already written to the government on this issue also. Then there are certain people who say we were not availing the credit limit at all from the banking system. We know that in the entire country, there are 1 crore 30 lakhs registered MSMEs. It's only 40 to 50%, 40%, 1/3 only are availing credit facilities. Rest are in fact on their own. So they don't avail credit facilities because of any reason. Maybe they can afford, they have their own liquidity, they can organize financial resources from their family, friends, relatives, or their own savings. So they say that since we were, not availing and we were efficient of our own, we were managing, not putting pressure on the government resources or the bank resources, we have been left out while we needed this facility at this time, because this has put in again pressure on our revenues and incomes and profitability and cash flows. So that is another thing. Now another scheme was this distressed fund scheme, stressed asset fund scheme of 20,000 crore. That has been launched. That is basically for taking care of stressed account and NPA account, basically to help them to revive their capital, restructure their capital by taking borrowing from the banks in the name of personal loans. That is coming in the form of personal loans. But that is a good scheme because at least some stressed account, I think the government mentioned about 2 lakhs account are going to be benefited. So 2 lakhs industries, maybe employing about 20, 30, 40 lakhs people will get revived instead of being referred to the, National Company Law Tribunal under the Insolvency and Bankruptcy Code and getting closed or liquidated. So at least to that extent, this is a good scheme which has got launched. I feel that there is no hiccup in implementation and there is not much of the problems in transfer of this benefit to the intended beneficiaries. Third scheme, that fund of funds scheme of 50,000 crore for infusing some kind of capital by subscribing to the equity capital of the good SMEs to provide them growth oriented support funding has now been I think the work has started, although a lot of time has passed, almost 3 months have passed. But now I think my earlier corporation, National Small Industries Corporation, has been probably entrusted with this responsibility to implement this scheme. So that is a good scheme because it's a huge fund of 50,000 crore for providing growth capital to the MSMEs. And I feel that this scheme also will pave a lot of good, road for the growth-oriented SMEs to further progress, because this is basically funding. But then there are a lot of concerns also, because a lot of new enterprises are not able to access credit. There are some enterprises which are not able to access even the branch managers, not getting the cooperation. And then the documentation, paperwork, procedures, ratings, civil score, all these things are also coming into the way and they are not able to handle. They are not trained enough, in fact. If they go to consultants and outside chartered accountants or firms, naturally they have to pay up, and even then they are not sure. So these difficulties are also being reported from a lot of organizations. So we are in fact working on these areas wherever possible from our chambers also. I am associated with PhD chamber and also FICCI, and from various forums we are able to help and connect them with the banking community and other policy makers, government, provide them help in terms of advocating their issues to the government. Some of the issues are, at least it is one thing I can tell you, that the government is very responsive. Wherever we write anything to the government, there is a quick response, there is a quick redressal. A lot of issues which we have taken up over the last 3 months have been addressed. So that way it is beneficial, and over a period of time, gradually things are improving. So let me bring in now the experts, in fact, to discuss on those specific issues. To begin with, Mr. Alvis Lazarus. Mr. Alvis, he is the Chief Executive Officer at Hesol Consulting, and it's an award-winning supply chain and management consulting firm from India. He's a senior leader in supply chain and logistics with almost 2 decades of supply chain hands-on experience in devising country-level and global supply chain strategies. Very good, very specialized in supply chain. I'm so impressed. I mean, he's been working for 15 plus countries. Great. So you have the wide experience of looking at the supply chain issues of various countries, and then what is the situation in India in normal course, and particularly during this COVID time, what has changed and what do you think is the way forward?
Yeah.
So over to you, Mr. Alvis Lazarus.
Okay, thank you so much. If the coordinator can just give me the screen sharing option. I need to just share my screen.
Yeah, just a minute.
Yeah, sure.
Yes, you can now present, please.
Yeah, so is my screen visible?
Yes, it's visible.
Okay, fantastic. First of all, thank you so much for that introduction by Dr. H.P. Kumar. Thank you so much for that. And it actually kind of consolidates all the different concerns faced with different supply chains, specific with the specifics to India. So obviously the title we have taken is business continuity amid challenges of broken supply chain. So that is what we are going to discuss upon. We can, to be very precise, it is business continuity amid challenges due to this COVID-19. So what I'm going to do is actually first talk about a basic understanding of what we mean by a supply chain and what is it's broken. When we say it's broken, what is broken? And specifically, um, because of this COVID-19, what were all the challenges being imposed, right? So that is what we see. And then I'm going to talk about what would be the way forward, because the issues have been discussed a lot. So I kind of, today when I was preparing the content, I was more inclined towards presenting, okay, what shall I do next? I'm trying to keep my content towards that. So let's get it started. So here you can see a schematic model of a supply chain. So, and this can fit into any sector. So this is not any sector specific or anything. So we have the planning cycle, demand and supply chain cycle. You have the suppliers who give the raw material. You have the manufacturer, and then you have the distribution cycle. So this is a simple way of putting a supply chain, which is such complex, in just a single slide. So if you see here, what got really broken here is on the supply side as well as on the distribution side, and you can also see one into mark on the customer side as well. So what it means here, let me explain what got really broken. On the supply side, the biggest problem which happened is inability of getting the raw materials on time. It could be of multiple reasons. It could be of that single source of supply. The other biggest reason is availability of your resources inside your facility for conversion. So these two pose a huge issue in terms of the supply chain. So this is one. Second thing is in terms of distribution, because absolutely what happened, we couldn't get our products onto the roads. And moment that happened, that actually created a lot of negative impact across. Because some of the sectors where things are perishable, absolutely things get to wait, and people start to panic, and everything went, which is completely uncalled for. That is one place where things have really gone bad with this COVID-19. Okay. The third one, what you see as a negative impact on the customer side, is not just orders coming in, it is a changed behavior with the customers. It is on the positive side, but that is a negative impact from a business standpoint. The reason is the change which has happened is quite steep. Normally the customers' behavioral changes happen gradually, but here, because of it COVID, it actually is a steep change, which I'm going to explain it. And because of that, businesses didn't have time to understand. Still businesses have not understand how I have to reframe or restructure myself such that I'm going to grab that opportunity. Because changed customer behavior doesn't mean it is bad. We need to quickly adopt to that such that we can actually get we can actually grab that opportunity. Okay. So with this preview, let me get into it and now pick few points from what Dr. H.P. Kumar has said. He talked about the issues because of the labor. He talks about the facility couldn't be run because I am not prepared to do social distancing while running my facility. This is number two. The third one is in terms of your availability of liquidity, which obviously will be taken care by Mr. Amit. On the first two, obviously, if you ask me, is there any solution, Alvis, have you done? Absolutely, it is not, because skilled manpower, making it available locally, it cannot be done overnight. So those two, now automatically, once your lockdown is relaxing, things will automatically fall in place. But what cannot is the changed expectations from the customer. So I am going to spend more time there, because other things, everyone knows it, everyone will follow it. But the change customer expectations, if you're not grabbing that, the business cannot survive. It will become like yet another case study like Nokia or any other organization. So let me focus more on that. So I'm going to talk about the 4 key opportunities, and these are all the positive impact of COVID-19. So let me start with the first one, which is customer behavior. Second one is a global e-commerce. That is specifically, I'm going to talk about online retail and how online is actually penetrating this complete industry in every sector. It's not just any sector, it's every sector. The third one is channel inventory. The importance or the view of inventory has completely changed. I'm going to spend more time on that. And the last one is global sourcing. So I'm going to first give you a preview of each of this, then I will go in detail of each of these to give you more insights on that. The first one, I consider this change of customers a positive change from a behavior standpoint. The reason being, because actually I'm going to just give you the preview and then go to the detail. If you see continuously, what was the biggest challenge in supply chain is enabling tech in supply chains, building infra, making it more reliable and flexible. The biggest problem with that is who will fund for it. If you take logistics as an example, someone came with a good technology where you can track the products, you can actually monitor the product, everything is great. End of the day, the deal will go to the person who's giving the lowest quote. So it is always driven by cost. Now there is a transformation from cost towards value, which is great. This is one single behavioral change which would completely transform the supply chain in India, which is the positive. The second one is global e-commerce. Now, yes, it is 100% sure offline markets, there is a steep decrease. The reason is people are still hesitant to go out. So what is happening? The offline market's loss is the gain of the online market. That is what the trend. Already the online retail's forecast is jumped by 2x of the pre-COVID estimation, and it is growing every day. How to gain from this? If I am a current business person, how I can adapt to this online to such that I am not losing my customers is what I will be explaining here. Third one, if you talk about any Toyota production system, Ford production system, every product only now. That is why if you talk about vendor managed inventory, if you see, these are some of the these are niche strategies adopted specifically in automotive sectors as well. What happened because of this post-COVID situation? People are not ready to take the risk. So now people are ready to invest and keep inventory closer to them such that they don't encounter any productivity loss. This is a huge change in terms of the behavior of a manufacturing concern. Now, this actually opens up a door of opportunities at multiple sectors. I am going to explain what are those and how we can capitalize on that. The last one is global sourcing. As Dr. H.P. Kumar actually rightly pointed out, in terms of dependency on a single source, it is not just we don't have risk management. We didn't even expect whether something will happen, which actually by a risk management tool, having a monopoly on your sourcing is always bad, but no one actually gives ears to the strategic consultants who have been really telling that it is bad because no one expected this. Now what is happening is alternate sourcing, looking for different sources of supply. This is actually fueling global manufacturing hubs. A lot of emerging manufacturing hubs are coming. So I'm going to touch base more on that. So that means logistics companies or logistics businesses who are hearing this, you have a gold mine of opportunities where you can now hear about a lot of new lanes coming in the market where you are going to do an export and import. So these are the 4 key pointers. I'm going to now elaborate one by one in detail. The first one, as I told you, in supply chain is a digital push. And without a digital push, it is absolutely difficult to get the maximum value out of this supply chain. Do you know, even on a food supply chain, the wastage in food supply chain alone is 25%. The wastage is not by inefficient transportation. The wastage is in terms of insufficient data available related to shelf life, related to preservation, related to how my product is throughout the supply chain. When you have this kind of digital push, when you have the technology enabled supply chain, this is going to benefit everyone without impacting the price in which you are offering your services, your products to the customer. You can actually make your bottom line really light, such that you can make good margins in the businesses you operate. So this is a great thing. Previously, customers are not ready to listen in terms of digital pushes. End of the day, they will be telling, give me at the best price. So logistic companies will, whenever they are going for a new clients, I'm talking about the B2B, not the end customers. It is very difficult to get good businesses, because end of the day, cost drives everything. And now cost is not just the key driver. Many new tech initiatives which actually hit a roadblock before are getting reopened now. To name few of the technologies, IoT is one technology which is picking up really good in India. Most of the logistics companies are adopting now. So if you are one logistics company, you need to look in this direction. Otherwise, you will be left behind, because customers now started asking, I need to know where my product is on a live a database, a live screen I want to see. These are becoming some kind of a mandatory requirements from customer standpoint. Now it is high time we should have our technology roadmap now, and someone is going to ready to pay for you this time. So the positive change comes in the form of focus on value over cost in terms of operations, and digital transformation is the way forward. I think this is one great positive we need to take in. So the key takeaway here for any organization is, what are the things happening from a technology standpoint in the sector I am operating, or in the function as well as I am operating. You need to now strategize in that direction. So this should be your boardroom discussion starting by this week itself, to ensure we regroup, we realign in that direction. And other things what I want to also talk about, there are few sectors which are booming. For example, when this COVID-19 came in, the requirement for mask, a lot of healthcare items, all those things have gone increased. There are so many businesses who already have an online platform. They were very quick to get those products. Even the initial power to SME, when they talked about it, they were very quick to respond to the market. This is what is required. We don't have time to make a strategy in one quarter, design in one quarter, implement in no. Leverage your positives, understand what are all the changes in customer expectations, deliver it in no time. Those organizations will spearhead in terms of grabbing this opportunity and moving forward. And I can quote many examples like that, not just not just this mask and all this healthcare items. Even people now started thinking very healthy. So yoga, exercises, outdoor activities, all the equipments related to that, all these sectors are booming like no time. So these are the sectors you need to now carefully understand which sectors are booming and quickly take them into your portfolio, such that you can grab this opportunity in a big way. This is number one. Second one is in terms of global e-commerce. Let me give you one number. The revised forecast of worldwide online retail, I'm not even talking about India, I'm talking about globally, it is going to reach 6 trillion by 2022. Previously, the same number was expected to reach by 2024, early 2024. The reason for this shift is more and more people are now inclined towards getting the products online. And as I've told you before, the offline market's loss is the gain of the online market. So what is the way forward is omnichannel. Now, if you see already all the big companies, because I am from a consulting area, I can see the designs. What we do is omnichannel. What it means, an offline retailer leverages all his offline infrastructure, still builds an additional channel to reach the customers in the form of online. This is called as an omnichannel. We need to invest our efforts quite fast in setup and omnichannel in reaching customers faster. This could apply for service as well. Let me give you one quick example. The laptop in which I am taking this is a HP Spectre laptop. Traditionally, what you will do, you will walk into a offline retailer, a HP store, you will take a demo, and then you will check everything. and then you finalize, make the payment, come back. I didn't even visit it because HP is very quick. I won't even tell HP. This particular retailer of HP is very quick to give me a complete experience online. He presented 10 different models, and this is quite a big purchase. This laptop itself cost almost 2 lakhs. So they do this in terms of to ensure, otherwise it's a loss to them, right? Complete online experience, sharing the models, sharing the specifications, giving me the demo, giving the quotation, everything has been done completely online, made the payment online. The delivery is also that it is basically delivered at my doorstep. How quick? Did it take 1 year for this transformation for an offline retailer? No. If that particular retailer didn't quickly think about this online point of view, he will lose all these things. Now, this is one laptop. How many such laptops he would have sold in that month, in the past month? This is what you need to look for. And not just that, this 6 trillion, we are also talking about, this is another people who are interested on global logistics. 1/4 of the global e-commerce market is going to be cross-border buying. What that means is people from India buying from India is not a cross-border sale. People from India buying from Australia, buying from United States, this orders qualify for cross-border buying. See that number. 1/4 of the global e-commerce market is going to be driven by cross-border buying. What that means is your global logistics is going to get into a big boom. So this is the time, if you are a logistics player operating in India, this is the time you make your global logistics strategy right now across the table and be ready for it. Otherwise, that 1/4 of 6 trillion, 1.5 trillion is the opportunity what you are going to lose. So this is another important thing. Traditional offline players looking towards online, that is making into an omni-channel, like what example I said for HP retailer, a very simple example, but very effective. The second one is whoever is working on a logistics industry, the biggest benefit is going to come from the global logistics, because 1/4 of just the online sector, online retail itself is going to come on cross-border buying. So now this is what you need to set up your global logistics strategy. This is another positive. The third one is channel inventory. I just said people are now not interested in just in time. So you may think, yes, okay, fine. They may keep the inventory with them. What is the big thing? This is where you need to really invest your time on understanding, because of this, what kind of business will be benefited. Whoever is doing this strategic thinking and forward thinking will make their infra ready, and they will become an obvious choice when market behaves. I'll tell you few indicators here. Because people are decided to keep more and more inventory, what is happening? There is a strong demand in warehouses. People want more and more storage places. Already your requirement of warehouses, that it is going in all-time high. So more and more warehousing requirement is going to increase. Warehousing related services are on the rise. Not just that, people are now very much interested, because they realize that because of this COVID, I couldn't handle this. I couldn't get my shipments on time. I couldn't even run a transit hub. They are ready to outsource their end-to-end of logistics and supply chain. So any player operating in the services, you need to make your portfolio not just on storage. You need to make it end-to-end. That is going to be a very strong potential. At the start of 2021, people will start hearing this, but we should prepare now to gain out of this. And I'll give you some numbers here. Just for digitalization in warehousing alone, the estimated industry size is $10 billion US. That is what the projection, which is there for just digitalization. So who's going to get benefited? All the software tech companies, if anyone is listening, you need to know, build products which suits in warehouse. It could be warehouse management system, it could be ERP, it could be transport management system, anything. But this is what the opportunity which lies ahead of you. And now people are ready to invest as well, right? And second one, value-added services. This could be as simple as packing, labeling, any value-added services which the client is actually ready to give to their 3PL partner. It is expected to reach around $150 billion by 2025. This is also a huge opportunity. The last one is basically the warehousing. That as well is on the boom. The numbers speak for itself. Just look at these numbers in terms of warehousing services and digitalization. Isn't this a gold mine? This entire gold mine is triggered by one change in behavior of organization. People are now interested in holding the inventory, not just raw material inventory, even their FG, they prefer to now keep it closer to their customers such that they don't lose a single sale. And the last one is global sourcing. One biggest way we actually burnt our fingers is having a single source of supply. And now people have realized, and there are a lot of restrictions are again imposed by the government as well, which is actually, to me, it is a great positive, because now we look for a lot of emerging hubs. The emerging hubs, it's not just India. We have Thailand, Indonesia, Vietnam, Malaysia, Taiwan, Philippines, Bangladesh. I can talk another 6 countries. These are the emerging manufacturing hubs. So this is a time where we need to focus, is these emerging manufacturing hubs is going to be my competitive edge, either through sourcing, such that you actually diversify your sourcing rather than single source. Not just that, if you are a person who's into retailing, can you procure anything from here such that your supply chain is going to become vast? Third, logistics guys, this is the place where it is going to open up new lanes. Moment emerging manufacturing hubs, they are relatively new for logistics. They don't know, okay, I am from Indonesia, I manufacture these products. Now I want to take this to 15 different countries. What will I do? As services required. Now I need a partner who takes care of completely taking this to 15 countries, store it and sell it. This is another service. So what this means is tons of global logistics related services are going to open up, and these are all newer lanes. Why to go and compete on single lane where there are hundreds of players are already fighting it out? Focus on the newer lanes, build an end-to-end service versus and the logistics. Obviously you become an obvious choice for these emerging manufacturing hubs to rely on you for logistics as a service. Okay, so this is the second one. The third one is load consolidation. The biggest problem with these newer lanes is they may lack volume. So they will be pushed to go for a part load, and you all know that comes as a huge price. So there is a new service which already people started doing, is load consolidation. This happens, so this is, the technique is not new. It happens in Chickpet in Bangalore. What they do, one guy who wants to ensure he gets the benefit of the logistics cost, consolidates both what comes in and what goes out, and he is a middleman. He doesn't have any tools or techniques, or he may not even know what is logistics, but people does this load consolidation. They move products from across the globe using this technique. Now we can make this into a digital product, or as a service can go and offer to those emerging hubs. I can 100% guarantee you these services will be at tremendous requirement will come in moment these emerging manufacturing hubs started picking up, and they have already started picking up. Okay, so these are some of the insights. The last one what I have is in terms of what we as consultants do is transformation. You can't just decide, okay, my business is like this, what can I do next? This is just a snapshot. You need to do 3 things to your organization, whatever organization may be. First and foremost thing, you should know, how is my business performing today? This is just a very simple engagement model, a proven model of how we derive or deliver value for our clients. This I wanted as a snapshot to you to tell. So first you need to understand, how is my business performing today? Document what and all you are doing today. That is step 1. Step 2, considering the future growth, considering the changed behavior. All what I talked today, you need to evaluate your current business and tell what could become my bottleneck. Not by today's expectation, by the changed expectation, what is my bottleneck? Only when you do these 2, you will be able to put across your action plans clearly. Moment you get these 2 clarity, you then put up a action team on a war footing basis, fix those bottlenecks, and make sure your supply chain is ready to grab that opportunity. And next goes the implementation. So this is a kind of a quick way how you need to transform your businesses such that you grab this gold mine of opportunity which has opened up by nothing but the COVID-19, which actually created a lot of issues like people availability, change in layouts, and etc. All those things to me is temporary. that will go off in few months. But after those few months, whichever organization is ready to take up the new opportunities will be the winners. With that, thank you so much for giving me the opportunity. I would be further glad to take any additional questions at the end of the session. Thank you so much.
Dr. Kumar. While Dr. Kumar joins us back.
No, I am there. My system was muted, in fact. So thank you very much, Mr. Alvis. I think it was a very exhaustive presentation, very useful for the people who are struggling, during these COVID times. But as you rightly said, it is not only the temporary problems which are, being faced now. You have to make long-term strategy, in fact, for getting over these issues. And a lot of people during these COVID times have learned a lot of new things, in fact. Online businesses, as you rightly mentioned, has gained, multiplier effect. A lot of new people have learned, in fact, how to do online business, how to order online. Even I have also learned a lot of, other things which we were not doing, like doing these conferences and webinars. Otherwise we were all having personal meetings in the conferences, or, and of course that has its own advantages and fun. But then to save time, to improve efficiency, this even working from home and online conferences, online ordering goods and materials and food, and online meetings, online, everything has become online. So it is very useful.
Yeah.
And a lot of new things that you mentioned about the supply chain organization also will be very useful, and people have to find long-term solutions, in fact. COVID has given, of course, an opportunity, in fact, to relook at our style of working and the existing infrastructure, and how do we go about. So let me bring in, I think Mr. Amit Shah has been waiting for quite some time. In fact, that is the very, very important issue which of funding, which also needs to be addressed, because a lot of people are facing these difficulties. I will not go into details. He has been a practical banker for more than 20 years. He is a master's in finance, and a CFA from CFA Institute of USA. So with a lot of professional background and experience, and practical knowledge, and the current environment that Mr. Shah we discussed. So what is your take as to how do we get over this difficult time, and how do the businesses manage not only temporarily but also look at the long-term solutions? So over to you, Mr. Shah.
Thank you. Thanks. Thank you very much, Dr. Kumar, for the introduction. And first of all, thank you both to Advani Foundation and Power to SME for inviting me here. And thank you to the participants for joining. Zubair, if you can let me share my screen.
Yes, you are. You can share your screen now, sir.
Is this visible?
No, not yet.
Now?
It's not that we couldn't see it yet.
Zubair, will you be able to do it for me?
Yes, let me put the presentation.
I can see it on my screen, but
Yeah, We can see it now.
So thanks everybody. And the topic today is, access to the right kind of finance at the right pricing. And that's an interesting point, because right now bankers are being blamed for not being very cooperative. So I wanted to, from my experience so far, I wanted to give the bankers' point of view on what we should be doing as SMEs. See, I don't want to say what the government should be doing or what the bank should be doing or what any other industry bodies should be doing, but actually what we should be doing to make ourselves ready to get the right kind of finance. And at the same time, like Alvis mentioned, how do we prepare for the future? So my presentation actually deals with, how do we deal with, how do we look at the next 3 months in terms of getting back on track? How do we look at the 3 months after that, where, we try to reach our pre-COVID levels? And then how do we prepare for the future? So that's the way I have made my presentation, but here goes. So yeah, and I think picture says more than anything else. This is the biggest issue today SMEs are facing. Liquidity, which is through delayed receivables, which is through money stuck in inventory. Large suppliers are demanding immediate payment while customers are not paying on time. Okay. And second is timely availability of working capital finance, both from banks, NBFCs, and anybody and everybody you can think of. People who see that there is an opportunity in this pandemic, and there are various opportunities, like Alvis pointed out, growth capital is not easily available. And even if you manage to get capital, the cost of borrowing is very high. So what do we do to face all these challenges? Next one's where. So the first question that comes to everybody's mind is, why are bankers wary of lending to MSMEs? And I am going to just talk about how we as SMEs and MSMEs get our foundation right during these times. The biggest advantage of the pandemic is that we have got enough time to think, we have got enough time to rethink, we have enough time to recalibrate the way we do business and how we do things. So I would say that, get all our registrations and compliances in place. When I say registrations, it is government has come out with various schemes for MSMEs. The definitions have been changed. There have been funds laid out. Nationalized banks are being nudged to lend more. But do we have the MSME certificate in place? Many people don't. Are our compliances in place in terms of being timely on GST filing, on employee provident fund, or NSIC? Are we in place? If a lot of transactions, all of us are aware, are not formal. So can we use pandemic to formalize all transactions? Because now the structure has become very, very friendly, especially companies are 400 crores in top line. And, one has to really get everything in place. Sure, every connected. Government, what do you call, system or the other. So might as well start formalizing all transactions, get all the books of accounts updated if they are not yet. And there is a huge opportunity out there for service providers and accountants in the cloud, if I may say so. There is a plethora of companies which has come up, which help you write your accounts, generate your invoices, help you with your collections, initiate your payments, and all of them at a fraction of a cost compared to what you were paying, few years back. I know the next one is very difficult, and that is trying to maintain the credit rating of the company. But if that is not possible, at least keep quasi negative reporting to a minimum and ensure that promoters' personal credit scores are high. And I will give you in my experience, we have rejected a lot of cases where the credit rating of the company is good, where there are no negative quality reportings, the business model is right, the financials are all right, but the promoters have not paid their car loans or credit card loans or credit card bills on time. And then a question arises, uh, why are they not paying? Is there a dispute or they just don't want to pay up? So, at least the second and third part, if we can get in place, we'll see negative reporting to a minimum and promoters' personal credit scores to be high. Credit rating of the company is going to be impacted. Let's be prepared for it. Be very regular in submitting your stock and book debt statements, your quarterly reporting to banks, your annual treasury reportings to banks. Banks like customers who are timely in all their submissions. So, there will be some customers who will easily get that extra funding because everyone knows that, this is a low maintenance customer, if I may want to say that. So why don't we become low maintenance customers? We will get better rates from the bank and we will also get better servicing from the bank, and for the simple reason that we are reducing the work of the bank by being timely in all our submissions. That includes renewals and enhancements of working capital limits on time. So, I know nationalized banks sometimes take around 3 months to renew limits. The MNC banks or private sector banks will take at least 1 month to renew limits. Can we submit our financials and our proposals in time, knowing the turnaround time of these banks and get the limits renewed on time? It will be very helpful. And for a quick turnaround on term loans, where you are going in for new investments, I have seen a one-page plan coming in, and this is what I want to invest, and this is what I think I am going to get out of it at the end of 2 years. That's not how a plan is put in place. You put a clear, coherent, and executable business plan in place. That business plan then needs to be supported by the numbers and the projections. And then, the break-even points and profitability and interest coverage, debt service coverage, all those points will fall in place. But put a plan in place first. Exactly what do I want to do? And if we get all this right, and now is really the time of getting all this right, government has relaxed a lot of timelines in terms of submissions of annual reports, submissions of in terms of taxation. We have plenty of time. Our finance teams have time to put in place a process in such a way that maybe on the 10th of every month we give a stock and book debt submissions, or 10 days within the quarter we can give our quarterly reporting to banks. Let's get everything right. Next one, please. And the next point was, how do I keep my borrowing costs low? So I have just divided into 3 or 4 parts. The first 3 deal with special schemes that are available from the government, or from your supplier, or from your buyer. So in case of local businesses, if you are supplying to a large client, you can become part of their vendor management or vendor financing program because they will negotiate on your behalf. If you are buying from a large client and you are a distributor, you can become again a supply chain financing. You can get onto the supply chain financing of that company. so that again they can negotiate prices on your behalf. Uh, for sales to large corporates, for MSMEs, the RBI has put in the trades platform. Please use that. Or you seek invoice discounting limits from banks or NBFCs or corporates themselves, because some corporates are cash rich and you can generate your liquidity, and that too at lower borrowing costs. For exporters, uh, please think of borrowing a packing credit and post-shipment credit in foreign currency, as long as you have a natural hedge. There was a time, before the great financial crisis, where the exports were in dollars, but people were borrowing in yen. I mean, I don't want that to happen. If the exports are in dollars, you please borrow in dollars, and the cost will be much lesser in terms of financing costs. Government has a interest subvention scheme in place for certain HS codes for exporters. You can use that as well. So your rupee cost of borrowing is very minimal. For importers, you may want to compare the cost of foreign currency borrowing on a fully hedged basis vis-a-vis INR borrowings. Sometimes it happens that importers keep on using the CCOD limits, but they just don't use the import foreign currency borrowings for imports. Another thing one can look for in both local businesses and for importers, can we move to LC and LC discounting? That might turn out cheaper compared to a simple CCOD or WCDL kind of borrowings. It's only a question of continuously evaluating, continuously following the hedging costs, making sure the bank also informs you on time and in the right manner and advises you correctly. So it also helps what kind of banks you choose. And for the short term, to endure the current pandemic, I would strongly request that, make the best use of this 20% extra working capital limits that are available. Moratorium is going to lead to higher borrowing costs and more EMIs to be paid out later. So I would suggest that instead of that, if you have security to offer in terms of land and building, plant and machinery, NBFCs can take land also, pure simple land, get a term loan for your working capital and pay it off as an EMI. That might turn out cheaper. And most important, keep the wheels churning. Request your suppliers, especially the large ones, to relax their credit terms with you. Maybe under LC, but that will be cheaper than going for borrowing to pay off an advance. Request buyers to make at least part payments for purchases that they have made, so that the money supply and the velocity keeps going. There is some rotation in the marketplace. I have seen some of the past videos of conferences, and they have dealt extensively on how to recover your money and what are the steps that government has allowed. There were lawyers, there were chartered accountants, so I am not going to dwell on it, but these are things that we ourselves can do and we should try to do. Next please. And this is the last slide, and this coincides exactly what Mr. Lazarus was saying in terms of prepare for the future. So while we are trying to, survive the next 3 months, get back on our feet for the 3 months after that, we have to prepare for the future, and the future, as he said, is going to be digital. Are our products going to be relevant for the future? Do we even know that people are going to buy our products? So in one of the videos, I heard Dr. Kumar giving an example that today, if I am supplying, I am a auto component manufacturer supplying to IC engines, and the market is moving to electric vehicles. Are my parts going to be eligible? Are they going to be useful? Otherwise, we need to start new product development now. In terms of people, the first belief that you need to have about your people is that everyone can be trained and everyone can be reskilled. So reskilling, training, soft skills, develop a second line of leadership, and keep people involved even if they are working from home. That is the most important part. And you know, there have been layoffs in many places, and sometimes there is absolutely no choice to do it. But one should also understand that we may lay off 10% of our people, but the other 90% will always remember how we treated them during their bad times. Okay, so maybe it's best to get everyone together, put down our problems in front of them, and they themselves will come forward that, okay, let's take a cut in salary for the next 3 to 6 months, and then once we recover, we will recover our base salaries later on. This is just a suggestion. I'm not making any recommendation. Processes, prepare for different future, prepare for a digital future. You have to digitize internal processes. You have to digitize your raw material procurement. You have to digitize the sales of your goods. You have to try and reach the as close to the consumer as possible. So logistics is going to play a big role here, and I think enough has been said about it, so I am not going to go deep into it. Bookkeeping, financial operations, HR, compliance, get an ERP on the cloud. Don't waste your money on new ERPs, new ERP implementations, nothing. Everything is available, and on a SaaS basis, you pay on a monthly basis and you move on in life. And that's one way to reduce cost. Technology becomes important, IT security becomes important, because some people will not come back to office now. At least 10% of the total workforce in the country, 10 to 20%, I would say, in my opinion, is going to continue working from home or remote locations. So do we have the technology to provide them with all the tools that they need to work and function properly and succeed? Do we have the IT security in place to ensure that our proprietary data is not impregnated? This is something that one needs to think about. And the last is balance sheet correction. Raise equity if required. And Dr. Kumar already talked about the government setting up a fund of funds, which is a 50,000 crore fund. It is not small by any means. Please raise equity if required, either from the government or from your suppliers or from your buyers or from friends and relatives, but raise equity if your balance sheet is not right. And what we need to divest is non-productive and non-required assets. There will be an office space which will now go extra because of work from home. You can rent it out, you can sell it. If you have property, please use that to raise long-term loans so that there is no stress on your liquidity at this point in time. And the biggest thing that you need to divest is old ways of doing business and rethink everything from scratch. And there are excellent, I would say, advisors like Power to SME. You have the Wadhwani Foundation doing a lot of work in this direction. Please seek expert advice on all of these. That's all from my side. Thank you.
Thank you, Mr. Shah. Thank you. It was very informative, very practical, of course. In fact, your point that the banks are also, looking for documentation and completion of the all, requirements, registrations and compliances and stock statements, booklet statements, and your overall conduct of the bank account. That makes a lot of difference. If you are compliant, if you have been regular, if you have been submitting all the renewal documents, you're submitting all the stock statements, book debt statements, the banks is always comfortable in dealing with you and extending you ad hoc and additional credit facilities also. But if you have been defiant and irregular in completing all these documentation, the banks is always, skeptical about dealing with you and suspicious about your completing all these requirements. So naturally, it goes both ways, and you have to take care of the bank's interests also, and that is how it works both ways. Of course, the right kind of resource raising, that becomes very important. The other point that Mr. Shah raised. If you really want to rationalize and cut down on the cost of finances, naturally you have to choose the right kind of resource raising also. It is not necessary that you keep raising the entire money from the bank. It could be other sources also. You could raise some money from friends, relatives at a cheaper cost maybe. Or, if you are raising money, existing funding from NBFCs, it could be costly. So you can have a mix of various sources so that you can rationalize the cost. So I think we have had a very good discussion. We have exceeded the time also. Let me ask Mr. Zumair and Sodamini. Are you there, Sodamini?
Yes, sir, I'm here.
So if there are any questions, would you like to ask?
Yes, sir. Mr. Manohar Shetty is saying the government talks about digitalization, but banks still insist on physical paper, which leads to wastage of time and energy. So while there's a lot of talk of digitization happening, why is it that these institutions, several government institutions are, and even some private ones, are insistent upon, physical, material like paper and
documents? Because the banks, as you rightly mentioned, Sudhamini, most of the banks as of now are still dealing with the physical paperwork.
Absolutely.
So let me ask Mr. Shah, because he has been dealing with banks. What is it?
I've been working in banks, sir, and in the last 10 years, I have had only 10% of physical documents. Everything else has come by emails or platforms. So see, email is one kind of a communication platform. Eventually, a lot of things will move to digitized platforms where you can do your KYC quickly, you can do your credit checks quickly, and that is already happening in the fintech world. Each and every bank that I am aware of, each and every NBFC is seized of this matter, and they are also moving everything to digital. But having said that, in the last 10 years, 90% of the papers that I have received as a lender have been on email.
Good. I think that's a good feedback. But then the person who was raising the question probably would have faced this difficulty practically. And even I also have the impression that when we go to bank, they ask for written letter. They ask for written letter. So that is the still practice prevalent in many banks. Hopefully, I think gradually this change will happen, because it's a generational shift which has to take place. Because old bankers, like I have been an old banker, so naturally I also believe in paper. When I see the paper, I am so happy. If somebody asks me to go into the mail and then check that he has sent a mail, I feel a little hesitant. It's a matter of habit. So over a period of time, gradually, I think the banks are also changing. Any other questions, Sadamini?
Yes, sir. So there are lots of questions regarding outstanding payments and receivables. There is still a lot of, problems that SMEs are facing, concerned with, receiving payments or raising invoices. So how is this to be tackled? This is a problem that's just been on by forever.
No, I think that problem continues. This issue is known to the ministries, the government, finance ministry, even Mr. Gadkari, the honorable minister, also has been raising at various platforms. They have been giving advice to the industry and the buyers, big buyers, corporates, government organizations, government departments. But then it is not working out. So the problem is compliance by the buyers. I think one reason could be that during the last few months, 6 months, of course, 4 or 5 months now, During COVID time, everybody has been stressed in terms of liquidity and availability of resources. But then the government organizations and government departments should not be, under any pressure, because they receive mainly government funding, or their services and products are, like monopolistic kind of thing. So why they are delaying, that is a moot question, and that is basically because of non-compliance and the attitude of the organizations and people dealing in those organizations involved in payments. So they feel it is all chalta hai and they can get it delayed. There is no accountability for them to delay. And the procedures are also very lengthy. One bill in the government passes through several hands. And if it passes through 10 hands, all those 10 people have to really clear it. And that is the system that we are into as of now. So while the government is trying, the things are very, very slowly improving, very slowly. I think it may take little more time, some more time. We are also harping on the government time and again from the associations to get the payments released. Padamini?
Mr. Surinder Singhal is asking, he says, even after 6 years of the government announcing doing away with notarization of documents, it is still being insisted upon. Why is this?
So who is going to answer this? Mr. Alvis, are you with us? Okay,
Yes, I'm here, but I may not be the right person.
Okay. Let me attempt that question. The question is of notarization. The notarization basically has been an old problem, because this notarization. Why does this notarization happen? First of all, we should understand. Why is this notarization required? Notarization is basically just to identify and certify that these people have signed at this time in front of me. So that helps the document to be legally enforceable. That is the only benefit of the notarization. That practice has been going on for a long time, and it is a physical notarization which is required. You go to the notary public, he will only just ask you to sign in front of him and put the stamp and date and time and his signature. That's all. So that is the verification that you have signed, that executed the document, and the document is legally enforceable. That document, when it is presented to the court at a later stage, if there is any case, so that shows the authenticity of the document. I'm sure the time has come now to digitize this, and there are companies I know are coming into to in fact introduce this system. And the day is not far off when this notarization will also get digitized and simplified. So, Damini?
It is 6 years now. Mr. Modi has announced that no more notarization is required, and still the departments and the government, banks, etc., they are all asking for it. Why?
Yes. No, that needs to be changed, because their procedures require that, and those procedures have to be amended. So you can write, in fact, if there is any specific problem with your particular document or particular case, there is a government portal now which they have started, is Champions portal. So if you can raise that issue, I'm sure it will be addressed.
I'll do that, sir.
So
thank you.
Let me try and answer this.
Yeah.
I don't know if banks require notarization these days, because self-attested copy is good enough for KYC, and now even that is gone in the last 2 or 3 months, because video KYC has been made legal. On the other hand, there was a time when even passport offices wanted notarized documents. Even they are not insisting on it. So I believe that this may be an isolated case with a couple of government departments or banks that you are dealing with. And I think you should be able to take it up very strongly with them. I hope I have answered you, Mr. Singh.
The next question is from Dr. S.P. Sharma. He says, what is to be done for all thinker managers who are not being practical? Now, Mr. Shah, do you think there should be some strict action against them? Do you think they should undergo some digitization course, or they should, or maybe they should be removed from their position if they're still insisting on physical documentation, and if they're being very impractical, especially in these times?
So Damini, I didn't get the question. Can you repeat the crux of the question?
What is to be done for old thinker managers who are not being practical?
That's a mindset problem. You see, it's a huge country, um, thousands and thousands, I think lakhs of branches in the country. You're talking of bank managers, isn't it?
Yes.
Yeah, bank managers are, very much stressed. Particularly this COVID time, the staff has reduced. The duty hours are the same. They are the only one, the bankers are the only one who are frontline warriors. In fact, when everybody has started working from home, they are the ones who have to come to the banks and sit there the whole day and face the. So that pressure and stress and all these difficulties, and along with the mindset, of course, because we have been trained as an old bankers, 60s, 70s, 80s bankers. I mean, 80s of course will be new bankers, but those who are old bankers, so our mindset is basically the old style functioning, sitting in the rooms, and then relaxed supervision and all these things. But I'm sure the things are changing gradually, and people are being made accountable. And today, if you are feeling unhappy, you can always raise an issue and write a little email to the head office or the zonal office, and then the action is taken, the accountability is coming. I can only say at this moment.
Mr. Shah, I would like to direct this towards you. Sir, this is an unforeseen situation, I think, for everybody alive today. And I don't think, even 3 to 4 generations before us have seen a time like this. The last pandemic and the last time such a thing happened was a really long time back. Do you think it is pertinent for the state to collaborate with financial players and create a crisis response plan now that we have so many resources at our disposal?
So the state has already collaborated, right? I mean, they have come in as a backstop to NBFCs who were not able to raise funds even before the pandemic hit us. The state has set up redressal mechanisms for people not receiving their funds on time. The state is giving equity to the nationalized banks. The RBI has a backstop facility to all banks and sometimes even large NBFCs. So the state is collaborating in any way possible. They are also trying to reduce the cost of borrowing in a scenario where inflation is going up. The cost of borrowing has gone down. You have to understand that. And this is all coming in from the liquidity infused by the state.
But sir, like Mr. Singhal is saying over here, he said even PSUs are not paying even after the award has been announced after the arbitrator, in spite of following the MSME Samadhan scheme for delayed payments.
Yes, it is. It is the problem that we have raised with the ministry, and let him also take it up through the champions, because that is what the ministry has said, that any such issue you should raise it. But the legal system is such where the arbitrator's award also can be challenged in the high court and other superior courts. So that is the legal system which is being followed, because in the facilitation council arrangement also, if the award is issued, that doesn't mean that it will be honored immediately. The other party has the right to go to the appeal.
So, Mr. Singhal, if I may answer that, your question was specific to a PSU, which is not releasing payments. I have found it very, very encouraging that there is a grievance redressal portal of the government of India, and you can put in a complaint on any government department. I strongly suggest that you put in for the respective department, and they will take it up very quickly. Second thing I have found very useful in my own case is you can even write to the PMO, and the PMO actually follows up with a particular department. So I would suggest that you use these two methods as well. And yes, the PSU has every
The
right.
legal system requires 12 months to be decided, but the 12 months never end in the district courts. Objection to the award, it requires only 12 months as per the law, but it is not followed by the courts. What to do?
Yes, that is a problem. Yes, absolutely. The court system as of now is a problem. So we have no answer to this. the delays in the legal proceedings is, is the current state.
So the next question is for Mr. Lazarus. You spoke of emerging hubs, coming up in Vietnam, in the Philippines, and various other destinations. So how do you see that panning out in the era of Atmanirbhar Bharat and Make in India?
Okay, so keeping aside the emerging hubs, yes, definitely in India, I think manufacturing as such, it is still a long way. So I would still consider that it is in a very nascent stage. We have kept the step one, but it should work two ways. More and more business should be inclined towards Make in India at the right price as well, because customers, it's very difficult to impose laws and tell them we need to buy here, because that is completely a negative side from what we talk about globalization. I think more and more we should equip our businesses with the right technology as well as funds, which we already talked about, and the right processes and systems. If we do that, definitely this scheme would be a great success. At this point of time, I would still consider this as a good start.
Right. So another question for you. In an era post-COVID where IoT and digital supply chains are the way forward, SMEs who are already struggling, from financial problems, and post-COVID, they're gasping for breath. Banks are not processing loans, and in a lot of cases, awards aren't coming out. Where will they get the capital to evolve digitally?
So think about this. Let me put this way, just as a kind of an encouragement. If it is from a logistics scenario, if startups are able to survive with the new business idea and spearhead, get the funding and move forward, for existing businesses, I see that it is going to be much easier, because you already have the infra ready. All you need to do is little bit of switch gears and make a focused effort. If you really, so two things you need to do: understand how you can run the organization in a very leaner way, such that your bottom line is really healthy, and then the effort should be focused. Most cases, what I see is we do a lot of things, we invest on a lot of things, we do a lot of effort, hard work, but it is not focused. So there should be one team. The strategy team should always focus in terms of, hey, where the value is going to come from, set the direction, and the next set of teams are going to focus to be a great success. Since you talked about IoT specific applications, for example, even milk supply chain, what recently we worked with IVF supply chains, there are so many supply chains booming up where without these technologies, it's very difficult to, I think if we focus that, make a game plan around that, and if we work towards it, I think definitely we can reap out of that.
Right, sir. Thank you so much for that. And with that, we end our question round, and this marks the end of today's session. I would like to thank all our panelists and our participants for being part of today's vibrant discussion. It was very enlightening for all of us over here. I would like to tell our participants that, we see that a lot of you come up with questions, and if there's any way we can address your concerns better through our webinar series, I've given a link in the chat box. Kindly let us know the areas we can help you in, so that we can address, we can direct our webinar in that direction. The Badhwani Foundation also has an initiative called the Sahayata program, where top business consultants will personalize, their consultancy around your business, and they will handhold you towards a growth strategy that suits exclusively you. So I encourage you all to please check out that link and see how it can benefit you. I would like to thank you all once again for being a part of today's webinar. Thank you very much and good evening.
Thank you.
Okay, thanks a lot. Bye-bye.
Take care. Bye-bye.